All right. I'm going to give people just a minute to join here.
Oh, good.
I can see your screen. So yeah, we'll give it just a minute here.
Yeah, it's all right, man. No worries. I'd say probably a good hour and a half.
Cool.
And I don't think, we'd be going that far anyway.
Yeah, I don't think so either.
Freaking everybody be falling asleep. I'll just go over some quick basic, support and resistance levels, different time frames, how you can break it down, and then go over, just drawing Fibonacci's.
Perfect. I want to make sure people can confirm. Can anyone, if you are watching this on Twitch, can you confirm that that you can hear us? That you can hear me, you can hear Pete?
Yeah.
Sarah Hubbs, thank you for doing that. Thanks for subscribing to Twitch Prime. I appreciate it. See if I can make this your screen. I'm going to make it a little bigger here. There we go. All right, it says we got 29 people so far. Jenny B, what's up? Hey, can you confirm that you can hear us? You can hear Pete, and you can see the screen. I want to make sure that everything is as it should be before he gets going. Okay, Dill says yes and yes. Teresa says yep. Top Gun says yes. So Pete, I think it's working.
Everybody's up in here.
Everybody's up in here.
I don't have any. It would be good as if we had like some slides or something, that people could keep and go back to. But most of the stuff, and that's what I try to emphasize. I mean, today we went, to a side room talking about education and stuff. There things out there are so expensive these days, and all this information you could get for free. And that's one thing, especially when you're starting out. It's not like, you got a lot of money to throw around or just spend it on things that you could get for free, where you can be putting that money into your account. Not talking down education because, unfortunately today everything's just so expensive. I mean, look at these colleges. You're paying, 60, 70 grand a year to go to school, and then you get out and go look at a job. So the same thing when you pay all this money to learn how to trade, and then you get out and good luck making money, good luck trading. And you spent all that money and, going to school, and now you don't even have money to start an account.
Yeah.
That's the emphasis I was putting on, not talking people away from it, but more of hanging out in the environment that we're in right now, and the environment of, hanging out in BlackBox Stocks, where you've got a lot of seasonal traders with all different perspectives, although most of them focus on, shorter term intraday scalping, day trading, and short term swings. But even though that's what they focus on, the education level and they're superb in respect that they can still talk to you and teach, especially new guys coming on here trying to learn, of all multiple time frames. And eventually, we've spoken about this several times, of finding your niche, finding your personality, identifying that, and then being able to get the stocks that marry your personality, that you can be happy. Happy stocks, happy life kind of thing. um, if you have total different personalities and relationships and everything, it's going to be extremely difficult. So if your personality is, hey, you know what, I want to go away, I want to relax, I don't want the stress, you're not the type of person that's going to be wanting to buy weekly Amazons, weekly Teslas, weekly Intuitive Surgicals. Those will really mess up your smile. But,
All right. All right. I think we got everything, and thank you for that, Pete. And I'm going to let you just go. I think we've got. We had a few issues with people not being able to hear. I think we've got it all resolved. So I think you're good.
cool. Is Jenny in here as well?
Jenny B is here.
All right, cool. Because I'm going to go over that Mo trade is an excellent setup, and when you look at this is a naked chart. So, but I'll go ahead and I'll talk about it as we open up. I don't know if you're recording, if you're going to record, or
I am recording.
okay, fantastic. All right, guys, welcome. It's Pete V on Tuesday, November 5th. Market close. We're looking at 5:03 Eastern time. We're just going to cover basic reviews on charting, which it tends to be an issue for some people, especially starting out, guys. This is a different language. Understand that. Don't be frustrated with yourself. Imagine you grew up all your life speaking English, which is by far one of the hardest languages to learn. And now you try to learn another language, it could be frustrating. It could be challenging. There's things you don't understand. There's slang, and you're like, what is that? It's the same thing with charts. Charts is a different language. And first off, let me go ahead and let you know everything we review in here. None of this by any means is a buy or sell recommendation. This is solely for educational purposes. And again, Bender has been, great enough to take some time out of his schedule to hang out in here and go over some stuff with you guys. So I want you to understand that first and foremost. And as I mentioned earlier, and you guys have heard me say this several times, the market does not care what we think. The market does not know we exist. So once we can identify that and be at peace with that, it will help us control our behavior psychologically. It could, it should, it would, I hope. No, those words should not be included in the vocabulary when it comes to risk management. I mean, we can say it should, or it could, or it likely will on probabilities. So we use technical analysis as probabilities. Okay. So we're just going to go over some basic technical analysis on researching support and resistance points. And then from there, we will break it down from different time frames: monthly, weekly, daily, 4 hour, 1 hour, 30-minute, 15-minute, 5-minute, 1 minute. And there is opportunity for every single time frame. And, that's another lesson for another time, but putting together a trading plan for yourself, for your personality, and based on your goals, your needs, and the time frame that you have available to trade. Because there are thousands of traders out there. You'll see hundreds of them coming in and out of the room, putting their trades on, hitting their hits, and going. Okay. So the market doesn't care what we think. The market does not know we exist. Secondly, it can be a phenomenal company with great leadership. They've got great products. They've got, great earnings per share, great revenue growth in a great environment. And the stock is not doing anything. And that could become frustrating. And you start asking, I don't understand, and I don't understand. And you know what? That is something that you want to understand, that the market doesn't care that you don't understand. All right. So it could be a great company and a lousy trading vehicle, and vice versa. It can be a company that is not fundamentally sound, that's losing money, and they come out on earnings, for example, and they lower guidance, lower earnings, and the stock still goes up. And that to us is it's puzzling. And it's like, why is it doing that? I don't understand. Again, the market doesn't care if you understand or not. It's just going to do what it wants to do. And it becomes so, it's a self-fulfilling prophecy because it's money thrown at an area. So what we want to do is pinpoint the areas where money's being thrown at, either thrown at support or thrown at as resistance. So today was an excellent example at the close. It's like, whoa, what's going on with AMD? So starting with AMD, I'd recommend you guys get some water or something or a little snack while we're sitting here. We're probably going to go for about an hour. Um, we'll go into AMD. All right. We know that they've had a heck of a resurgence in Lisa Sue, right? So you're just going to see there's a bunch of scribbles on here. I'll leave this alone because I don't feel like typing it all in. But we're currently looking at a monthly chart. And I recommend, you guys do what you want to do. The only thing I'm not going to recommend any buy or sell any ever. The only thing I would recommend is look at, or a couple things I'd recommend. One of them being look at where this stock has been before, because history does repeat itself, and there's a high probability that if one thing, it's been there, there's probably a good chance that it'll go there again. So we're going back here. This is on a monthly. I mean, this thing goes back into the 80s, and eventually we'll come up to what makes relevancy, right? So picture this. I'm going to zoom in, and now we can't see the future, right? The stock's at 17 bucks here. And we're going back, and this is here June of 2018. The stock's at 14 bucks, 20 bucks. Shit, it was down at $1.61 down here in 2015. Right. So we're looking at this thing, and it's like, we all remember the dot-com era, right? Stocks were trading up ridiculous valuations. I mean, you had 3 stocks that were greater than the US GDP. And, eventually everything came to roost, but it remained irrational for so long, that you could have been wiped out if you did not use proper money management. So looking at it here, and we'd focus just in this area here. Okay, we can't see. So this is looking at 2006. All right, and we'll actually bring this into the window here where you can actually see. Okay, so we're looking at here on the left-hand side of the chart. You're seeing this is 2007. All right, this February. This went on before the debacle with the housing crisis, and everything just went to crap. All right. So, but prior to that, we can't see that area. All we can see is this, right? So now I just zoomed in on 2010 and to the end of 2009 here. All right. And if you are blinded by lack of information, this is all we see now. This is from the beginning or December 2009 here, October, November, December. And then you've got this time frame here goes all the way through 2016. So looking at 7 years of data here, and you're like, okay, well, shoot, this is $8, but it looks like it's recovering here. Where is the good likelihood that this thing will go? Right now, we can't see any further back. So if I'm doing an analysis just on this, even though this is a monthly, I'm going to ask myself, well, where has this thing been before? Because you want to understand the people who bought here in 2010 at $8, $9, and this thing goes down to $1.60. If they held on to that, they are in a world of pain. So when you're hurting, when this thing comes back, you just want to break even. You don't even think about profits anymore. You're like, God, just get me out of this trade. I've been in this thing for so long. It's so frustrating. I just want to be out. So when we're looking here, when you're drawing lines as far as back as you can go, I will start here and say, well, this was the high here. This was the high. So I will draw a line there. And when it pulled back, where did it go to? Well, here's the low that came in on August 2010. So I will draw a line there. That's an area of support. All right. It bounced off of that support, and then it pushed back up. And, well, what's it doing? It actually went lower than the previous one. So what do? I draw in another line right in this area here, right? So then, well, if it's going to come down, I'm going to go look for this thing, for this area here, the August 2010. I'm going to look for that to hold that support, right? And if it doesn't, I can say, well, you know what, here, this 2009, if we lose this support here, August 2010, well, the next area would be down here, would be November 2009, low of 433. So we'll draw a line in there. So now we can't see the future, guys, right? So this is all we can see. I'll zoom in just on this area. This is all we can see. All we know is that this was the low and this was the high. This is the range, the high of 1024 and a low of 433. But when we went up and we held in this area, we went sideways. Remember, every single one. So you got 1, 2, 3, 4, 5, 6, 7, 8 months of this range. And essentially, we could draw a line in there and say, well, the lowest there was 696, which came in on this candle before the breakdown, excuse me, in August of 2010. Right. So now, if we're not looking back here, it's like, well, crap, where's this thing going to stop? Well, we were looking for it to come down here because that was the next area of support. But what do you know? It actually stopped and held at this first candle here, right in that general area. So what is this? This is actually a higher low. We didn't go down to 433. We held the 553. That was the low put in this month. And then we pushed back up. And now one thing I want you guys to understand, in the same scenario, when people for 8 months were accumulating this thing, and you look at the high was 1024 and the low was 696, $7. So that's a huge move. That's about a 50% move from $7 to $10, right? Or 696, yeah, $7 to $10. You're looking at almost a 50% move. So this is one floor. It's in this range. If it breaks out of this range to the upside, you look at this as being the top side is resistance. If you look at this thing breaking to the downside, you look at the bottom of this highlighted channel of being support on the bottom side. So once we break down from there, well, previous support on the way up will act as resistance. So you see this 1 month we broke down. We came to the top of this candle here, the October, what was that? Actually, September 2009. And we held. It's like, okay, well, shoot, that's hanging in there. And then the next month was an inside candle. And it was actually the low was a higher low. We didn't put in a lower low. If we did, then we would be looking for 433 on a long-term thesis. And okay, well, we're back at the bottom here. Remember, the people bought here at $7 and this thing went down to 550. They just want their money back. So when it comes back up, you better believe that it's going to encounter resistance here. And sure enough, we got 1, 2, we got back into the range. And okay, that range is clear. We're back into this spot. But nothing is really happening here, guys. And we happen to be looking at a month. But imagine this is a 1-minute chart, and you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 minutes of nothing. Get rid of the price action. But guys, this is just, it looks like a flat line. There's nothing going on here. So to trade in here, you're going to get all chopped up. But now we understand that, well, this is from 5.5 to $10. So if we enter these properly, there's a likelihood that we're not going to get chopped up and we can actually make good money on this. Okay, so if we get back into this range and we hold, which here we see, we're putting in a candle. Now, this candle here that came in on November 2010 was higher than this weak candle that came in on August 2010. We put in a higher high. We still closed below. So now we're looking for higher highs. Every time there's higher highs, there's interest, and there's a high probability we go back up to the top of this resistance channel. We're back in that floor of congestion, that zone of congestion, right? So sure enough, we went sideways here for a year with a little 2 months of whoop, we slipped down and then we got back above it. Okay. But in reality, I mean, it traded from this zone sideways. So here's the thing, guys. If you bought at the end of the year, at the beginning of, say you bought it at $7, thing goes up to $10, comes back to 7, goes up to 10, comes back to 7, right? And you're like, man, I've been in this thing for a year and I haven't made any money, and it's not paying dividends. It's just dead money. For that, put your money in the bank. But if you bought at the bottom, took some off at the top, added at the bottom here, you would have been stopped out. You're wrong. But hey, once it got back above, we're good again. And you ride it to the top. And all you had to do was put on one trade where you made money. Your second trade you put on, you got stopped out for a small loss. Why is it a small loss? Because we know, hey, if it breaks below this line, we're wrong. We're stopped out right away. We don't have to sit in here in all this pain. We took a small loss where here we had a fairly decent return. Now we got back in. Well, we could get long again with our stop below this. For an aggressive stop, we'll put our stop right below that area there. If we make a lower low, we're wrong, we're out. However, right now this floor is holding. So sure enough, where does it go? Back to the top of the range. So now we don't have any more data. We need more data. So let's zoom out and see if we can find more data. And now you can see, again, this is a monthly, guys. We were just focused in on this one area here and saying, oh, here's that area. We ended up, again, it didn't go quite as high. So what do? We a lower high. So now we start drawing trend lines and it's like, oh, crap. Okay, well, here's this trend line. So this downward, and you need 3 points, right? So here's 1 point, 2 points, 3 points. That's a trend. That's a monthly trend, which is, that's when you look at a 1 minute trend, it's like, well, there's no power there. When you look at something that's been trending for months, there's a lot of power in that. Okay, so understand the time frame you're looking at. And you can say, well, okay, well, crap. Since this support, and we'll go ahead and draw that, you can see the support line here. We broke. So on the way up, it's going to be resistance, right? So when we finally got back above here, was kind of, again, putting in a lower high. And then here, it's like, oh, crap. We took this thing out right here, right? So get out. If you were getting long here at support, it broke. You're wrong. Get out. So it's like, well, shoot, where's this thing going to go? How far low is it going to go? Well, I can't go far back enough. I need to draw a line and see, well, where has this thing been? Well, here was the low. That's what we were looking for, down at 322. And it stopped there, stopped at 322. And then the next month, boom, it pierced below there. So it's like, oh, man, we got to go further back and say, well, if this low, now we're looking at more data. Before, we could not see this level here. All we could see was this level. So we got to open it up and say, well, crap, where's the next level this thing is going to go to? Well, this is the next low. So if we're sitting there waiting and not chasing, we're sitting there waiting for it to come to us, right? We can't see the future. This is all we can see, all right? So we see these lows here at $1.62 and $1.86. And we were trading this box. Here we got stopped out. We were wrong. Then we got back in the box and we said, hey, man, it didn't really quite get to the top side of that. So it's showing some weakness, right? But going back, I was about to put my hand to cover the screen. You can see once this support level failed, where's the next level? Well, right here, right? So this is the next level. We're looking for support. So we could have tried to get long, look for this thing to support right here where it did. We put in a massive hammer and we got back in that trading zone. And you know what? It was a trick. It faked us out. If you overstayed your welcome, if you managed it correctly, you would have probably taken, you had a gain from this support. So you would have made money. But once it got back below this level here, you're wrong. Get out. So next thing we're doing is looking for this area, 1, 2, and actually right here, this was resistance, right? These 2 months were resistance. So access support, previous resistance becomes support, So when this thing pulled back, we could have bought again right here. And we would have been wrong and we would have gotten stopped out. So the next line, where did it go? Right here, 433. You guys see this hammer? Well, where did it go? You can see the trend line. It went to this area, right? This mouse pad. There you go. So this area here, when we look at that, if you don't go back far enough, you won't know, well, where's support, right? Here's support right here. Because if you can't see this and all you see is this, you're kind of blind. You're gambling in a bit. But here's the thing. If there are no, like, let's say this was the lowest low. So we'll pull up an Uber, for example. We'll come right back to this. But Uber hasn't been trading long enough. So it's like, well, where does this go? Where's the next possibility? This is the floor. So if you're trading Uber on a monthly and you understand the valuation And you say, okay, well, these guys aren't really making money, but if I'm trading this technically, here, I'm going to draw a line at the low, 27.97. If we make a lower low, you're wrong. Get out. Now we can say, well, here's this area here, support. We lost that. So on the way up, that's going to be resistance, right? So this area here, support. On the way up, that's going to be resistance. So we know these things. And then obviously we have our highs, and that's going to be resistance as well, because there's still a bag holder up there who bought this thing at 47.08, and he's down freaking 20 bucks, a little more than 20 bucks, or 28, a little less than 20 bucks. So if we're trading this, how can we structure this? Well, does it go lower? This is where we'll come in and bring out our old Fibonacci tool, right? And you can say you got extensions and you have retracements. And normally the extensions that are prevalent are the 127 and the 1618. And I'll send you guys and go read about Fibonacci's. But the heart of it all is that everybody watches those levels. All the algorithms are programmed around those levels. So what happens? It becomes a self-fulfilling prophecy. All right. So when you do Fibonacci's, you want to do them on impulses. And what that means is from one, let's say from the low to the high. Okay. So we can't see the future here, right? Let's just say we have 1 month, 2 months, 3 months. And we're like, okay, well, here's 3 months of data. I'm going to take a Fibonacci from this low to this high. Okay. And the high was 47.08. Let me see if that captured it. It should be on capture, but sometimes it does not. Edit. All right, 47.08. All right, so we have 47.08 as the high. So if we're looking for this thing to pull back, we're looking for a 50% retracement. That's usually that to 61. If it goes below there, then there's a likely probability it will do a full 100% retracement. So from low to high, remember, low to high, when it pulls back, it stopped at the 50%. We could have gone long there. Said, hey, you know what? I'm going to put my long would have stopped slightly below there. So we would have come over here and said, hey, if we are wrong, we know that there's going to be people that are looking at this 50% area, and there might be some buyers right in there. But if it goes below that, we're wrong, we're out. So it came down and it retraced 100%, full retracement from the opening print right there. So if it goes below that 36.08, we're like, hey, that's the lowest this thing has ever been. Where is the next level that it likely will go? So we would put our stops right in this area. If it makes a lower low, guys, get out the way. So now where is the probability that this thing will go? Well, we know it's the 127 followed by the 1618, right? So if we extend beyond the 100 start, so we started here from low to high, we pulled all the way back to the starting point. Where's the next level? Well, 127. And sure enough, that's where it kind of stopped. And then, it bounced back here a little bit and then it sold off some more. So now after the 127, well, where's the next level? Well, the next level comes in at the 1618, which was right here. And sometimes it's amazing. These things work right to the print and they bounce. And we did get a little bit of a bounce, but the weakness still remained. And, we're still at this level. We're actually below the 1618. So now, if you're looking, we'll break this down into a weekly and see, well, what does the weekly show us? We'll have more prints on here and you can get even different levels, right? We cannot see the future. We cannot see beyond September 23rd. Okay, so beyond this level, here, let me erase this. That's not what I want to do. Right tool for the right job. All right, remove drawing. We cannot see any of this. All right, guys, this is blacked out. We cannot see any of this. All right, and I will make that so by doing this. Okay, we can't see. All we can see is, okay, crap. We went to beyond the 100%. We went to the 127, bounced, and well, we're back in that 127. Oh crap, we broke below the 127. And so remember, the 127 was an area of support. So on the way back up, wouldn't you know it, that it acted as resistance on this week right here. Look at this thing. Right there, it failed. So, oops, the arrow is in the wrong direction. But right there, when it was pointing back up, it failed. Why? Because that was support. So support, the people who got in here looking, hey, 27, it's going to bounce, it's going to bounce. Well, it did, but they probably didn't take profits and it's weaker and they got stopped out. You could have made money in here. You could have made money in here. I mean, it traded from 33 up to the 35 level, traded in this range. And again, we're looking at a weekly. Every candle now represents 1 week. So it bounced back up and previous support became resistance. Here it poked through and it's still kind of struggling. So we're like, all right, crap. Well, from low to high, we're going to take it off of this candle and say, well, is this the floor here? So from this low, we'll go ahead and get a fib retracement here, or an extension, excuse me. From this low to that high, and remember, this is 2 weeks. So, excuse me, yeah, each one is a week. So this is 8, what do you have, 10 trading days in here. All right, so as we zoom in here, and this is going to become harder for you guys to see, but you can see here, I'll try to show you the future. You can see our retracement out from this low to this high in a matter of 2 weeks. We have the 127 and we have the 1618, which is where we are at now. Right, but we could not see the future. All we knew is, well, the next level would have been 127 followed by 1618. Right, so now we open this back up and you can see, well, crap, that fib extension, we're at the 1618, and that's why it's stopping there, guys. All right, so now we could say, okay, well, from that level, we could take another fib, from this low and bring it up here and see if we make a lower low. This is an impulse right here from this low to that high. And an impulse means before it turns back, right? So it went up here and then it pulled back. There it is. And you can say, well, arguably it pulled back here as well. But it had an impulse up and the up momentum is done and it pulls back. So when it pulls back from the 100%, we look now at this level. If this thing is going to fail, get rid of the highlighted box. If this 100%, it failed, so I'll get rid of this Fibonacci extension. You guys can see that measured move right now, we're at the 1618 from the low of February 2nd week, 2019, or September 2nd, excuse me, up to the high of the week of September 9th. So on those impulses, 10 trading days there, the pullback would be 100%. If we lose, that would be the 127 followed by the 1618. So we're there, for what is it? The number is 2788. We're at 2797. Could it go there? Yeah. And if we lose that, then, well, let's look at another target. What would we look for? So we're going to remove that just to clean this up a little bit. But we know right now that 2788 is the extension from the September 2nd to the September 9th. That is the 161 extension, which that's where the algorithms will come in. That's where the pros will come in. And it becomes a self-fulfilling prophecy because everybody's seeing the same thing. So again, guys, not a buy or sell recommendation, but if you're getting long this and putting your stop at like 2787, which is slightly below the 2788 161 extension, you'd look for this thing. Well, everybody who bought in here is losing money. Everybody in this chart right now, if you're long, you are losing money. Okay. It's at 2802. Unless you bought at 27, between 2797 and 2802, you are losing money right now. Right? So you need to understand that there's a lot of pressure above, outside of any news or any nonsense that comes out. There's a lot of people up here losing money. They just want their money back. So we know, again, on the weekly, we'll break this down for a daily so you guys can see the impact of everybody. And now here, I'm going to erase all these drawings. 21, how come? Clear drawing set. Yes, that's the one. All right, I'm going to erase all of this. And again, this is different time frames, right? So we look from this high, that impulse. That's what I was talking about from right here. You can see we went to the 127 and then the 1. All right, right here. Remove drawing. All right, so here's one impulse. So we went up, it pulled back. We went up, where did it stop? Right there. And then it kind of pulled back. So we took out the 100%, and that's actually not perfect. Let me put it right there. That was the low, and that was the high. All right. So based off of this impulse, if we go lower here, and that's not the weekly, we're looking at the daily. Taking it off of this impulse from this low to this high. So understand the impulse, right? Here's one impulse move, boom, it stopped. And then it pulled back. All right. Here's the other impulse right there, boom. And you could say here because it did pull back. That's why I like to look at longer time frames. Here's an impulse and it's pulling back. These are impulses. Here's an impulse from the low to the high, then it pulled back. Here's an impulse, guys, from the low to the high, then it pulled back. And now I can draw fibs all over this thing, and you can see it's amazing the way this works, right? So from this low to this high, impulse low to impulse high. Where did it go? To the 1618, and it bounced, right? We'll clear that up. So you guys saw that. We'll remove all these drawings so you guys can see. We did an example from here to here. It went to the 1618. You got that? Cool. Awesome. All right. Now, from this impulse, low, to this impulse, high. Where did it go? Oh, below the 127. It didn't exactly get to 1618. But you could keep those. And that's when you guys hear me talking about impulses. All right, I'll draw that in there. There's that one. All right, so here's low to high. Here's another impulse there. There's another impulse from this low to that high. And then we pulled back and an impulse from this low to that high. So when you guys hear me talk about algorithms, fib clusters, what does that mean? That means multiple fib levels. So right here, you can see 1, 2, 3, 4 right in this area. There are 4. So you have this one, 1, 2, 3, 4 right in this area from different time frames, or excuse me, different Fibonacci's, right? Taking one from here, from this impulse to that impulse, from this impulse to that impulse, from this impulse to that impulse, to that impulse to that impulse. All right. So we have what's known as a cluster right here. You've got all of these right here. This is a cluster, which the low side is 2740, and then you've got up at the 2801. So you've got 4 clusters that are in this area. So that just says, well, there's a higher probability that there are, because algorithms are programmed at different points, right? Different strikes, different points. Not everybody's exactly to the same price. The money managers out there who set their software, their technology, behind, even the fast, what do they call those? The high frequency traders, they all have machines trading them. Machines are programmed. The machines are doing this faster than anybody can think about. So what we need to do and use as an edge is, well, where's the likelihood that this thing is going to go, and how many probabilities do we have working in our favor? All right. So right now, if you're long this, or if you're thinking about getting long this thing, well, crap, where's the next area this thing could go? So we'll clear this all up and say, okay, we understand it's a multiple clustering. We say, again, this high, right tool for the right job, right? Where is it? Get me out here. All right. So again, and then guys, I will go into giving there you go, right? There's a cluster right there, or excuse me, a fib extension. We're at the 618. So if you're like, hey, you know what? This is the lowest it's been. I can take a stab at this thing. Just understand, if you do, everybody who bought, and this was a little bit of an inverted head and shoulders fake out, but everybody who bought right in here, they're going to be looking to sell when it gets back up. Give me my money back mentality. Poor man's mentality. No offense to anyone. But give me my money back. I was wrong. Give me out. They just want to break even instead of saying, get out. Put that money somewhere else. How long are you going to stay in this thing until, you go broke, completely get wiped out, or just past that time? Right? So understand that there's congestion going back to August in this zone. The zone of confusion, the zone of congestion, right? So we'll clear all that out. And now I'm going to touch on Mo. Jenny pointed this out earlier, and this was beautiful. I've been looking at this thing for a while, and just an excellent setup. So first off, we want to back this thing up. Again, where has this thing been? And I'm going to erase every single drawing so we can do this together, guys. All right, gone. Now, this thing is going back. People have been smoking forever. I mean, going back to 74 cents. Is that relevant to a $40 stock, $50 stock, up as high as $77? No, right? Not at this time, at least. However, if we keep coming down, we need to go back in time and identify, right? So when we're doing an analysis on this, remember impulses, right? Impulses with everything. We want to see, first off, support and resistance. Okay, so we'll go back. This is going back to 2007, before the debacle of the housing crisis. You say, well, there's a high there. And you can see when we came back and recovered 2009, it went sideways over here for a little while, right? I'll zoom in just on this area here. So you guys can see from 2007, this thing took a massive beating, put the lows down in here. So, and we had another low in there, all right? And then it broke apart here. So when it came back up, right, guys, the same analysis on every single chart, every single day, every single time, all right? These people who bought here, once it broke down, they're all losing money. So this is the next range. When it gets up there, you better believe that this thing, when it starts working its way up, right here, as it did, it's going to pause or consolidate. And this thing kind of, and this, people smoke and drink alcohol when times are bad, right? So, you can see that longer term, there was a trend. We could start drawing that trend in there. We can't see the future. We can say, hey, you know what? From that high here, there's also another channel in here. And this isn't perfect. This is just for example's sake. But I want you guys to see that what happened here, this becomes a self-fulfilling prophecy, guys. This right here, this area, come on, right here, all of this is resistance. Why? Because over here, it was the bottom of this range. Mouse pad is, all right. It was support, 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 right? So as this thing, if it breaks that, it's like, whoa, so we got to go further back to find out. And I'm back. I don't know. I don't remember. I know it was at $1 and change at one point, or 74 cents, right? But it's like, well, if I can't see back, I got to go further back. How far is this thing going to go? But until I can go back and see that, well, why did it stop there? Look at that. Eye-opening. It stopped here because that was resistance there. That was resistance there. That was resistance here, guys. This is not magic. Sometimes it is. They call it PFM, pure effing magic, right? So the reason you see this ball here, well, shoot, you don't have to be a rocket scientist to see this, right? You could say, well, wow, if I was looking back in time, I would have known that this would have been an excellent area for support here. So I'm going to release all these drawings. And now that you guys saw, the question was, why did this thing decide for some random reason to stop here? If you're not looking back here, you kind of wouldn't know, and you're like, oh man, I don't know. But now if you are anticipating, you're like, man, this thing is getting slaughtered. I'm going to look at 3 points. 1, 2, 3. So there's a very high probability that 3 points being a trend and being excellent support. Remember, these are months, guys. So this is multiple years of support being created, or excuse me, resistance being created here. So once that resistance finally breaks out, right here, which it did with some serious pop, right? Once this resistance breaks out, we're going to look for it on a pullback to act as support. Well, shoot, it didn't pull back there. It didn't pull back here, all right? It didn't pull back here. It pulled back, but whoa, easy there, sugar. It didn't pull back here. Oh, it did pull back here. And look at where that stopped at. It's not random. This is because all the computers are programmed. Screw the news, guys. No offense. All the computers are programmed. I don't need to see the news. If it goes below here, I'm wrong. I'm out. I don't care why it went below. All I know is that it went below. Period. Doesn't matter. The market does not care what I think. The market doesn't care what anybody on TV thinks. If it goes below here, my proper risk management, my proper risk analysis is, hey, I'm wrong, because these levels back to 1998 resistance, 2002 resistance, 2004 resistance, a little minor resistance here in the end of 2004. We finally broke out into 2005, but we have from 98 till 04, 6 years that this thing could not get above this level. So when it comes down, this is an excellent area that we would have been sitting there licking our chops, waiting to get in on this, right? So let's continue with the analysis. All right. The information we have in drawing support and resistance, that's the most important thing. Everything else could become paralysis by analysis. You don't need upper studies. You don't need lower studies. You don't need any of that. Okay. That might just confuse you. The smartest thing to do, and I love what Charlie does, just a clean chart, basic, nothing else, right? So we see this area here, we push to a high, we stop, we pull back. Here, well, we pulled back there. And remember, this is a monthly. So here we hit our high, and then we had several, they didn't pull back. And here, let me draw this like this without even looking at. So you guys can see, well, this was the high here. I'll draw a line right there. We stopped. We couldn't get above this level. Several months hitting our head in that area. Then we had several months of hitting our head in this area. And then, hey, we made a high right here. We took that out, but it failed. And then we made another high here. All right. So until I can see the future, I don't know the next level. Well, I could tell you what I can do. Now I'm going to use a Fibonacci. When we made higher highs, it's like, okay, from this high, yeah, let's start back here. From this high to this low. You guys see that? Now it's the going high to low versus going to high. Okay, so the starting point being the month of March 1st, 2004. All right, this is our starting point from this impulse high. We're looking for a retracement and an extension. So what happened? It retraced almost to the 50% area, right in here. This would have been a decent buy zone. Why? Well, we could go in and say, you know what? There are multiple probabilities because this area here, when we pull back here before that fib, there's a low. This area here, right at this 993, $10. This was an area of support here. And remember, these are months. We actually had one here that we went 7 months at what is that? $10? Yeah, 10.50, 10.5, right? So we're like, okay, that's support. Before we even draw here, let's get rid of this Fibonacci. Remember, support and resistance, most important lines. All right, so I started drawing all those lines. I just erased them all by mistake. Shit. Shoot. All right, resistance. This mouse pad, I should use a regular mouse for doing this because this thing, it's all fancy and stuff, but sometimes it's frustrating. So please bear with me, guys, and forgive me in advance. All right, so I'm just drawing lines. When this thing pulled back, it supported there. Pulled back, it supported here. Okay. Now on the way up, new high before it pulled back. There's an area of resistance. A new high before it pulled back. There's an area of resistance. All right. New high before it pulled back. There's an area of resistance. And new high before it pulled back. There's an area of resistance. Now we can't see the future, guys, and we're looking at $20 here, $10 to $20. Right? We do start throwing in some more science behind this and saying, well, this pullback here, I understand this area of resistance on the way back should become support, right? And it did right here. And we could say, well, what else can I use? Well, another thing, we want support and resistance lines first, right, guys? Well, you need 3 points. All right, here you go. You can say, well, I'm going to get in early. Here's the second. And even before that, we would have had this stopped out once that trend line broke, and you would have been waiting when it pulls back. Where's this thing going to pull back to? Where's there a good opportunity for an entry? Market conditions first, what's happening. And sometimes you have the honey badger give a crap about what the market thinks, and they do their own. All right, so you have an impulse here. So from this low to this high, right? So we're going to take it before it pulled back. We've got this high to that low. That's an impulse. Now, look at this, guys. The way this works, this high, wouldn't you know, it's the 1618 extension. And this high, previous resistance, wouldn't you know, it's the 127 extension, right? So what this is doing is just increasing our probabilities. When we get in a trade, you know, someone could sit here and argue, say, hey, we've got sloppy. It's not too bad. We've got a left shoulder. We've got a head. We've got the formation ahead. Here's your right shoulder, right? The right shoulder, I'm looking for a pullback to the 50%. Okay, so, and even here, the pullback would have been to 50%, would have won. We didn't quite get there, but it got going back up. We retraced this 100%. We went to the 127, paused, kept going, and then we went to the 1618, which also coincides with the symmetry, coincides with previous high, right? So now we took a fib from this impulse high, right there, that impulse high to that impulse low, and we're going to come up with the 127 and the 161, right? Where's the 127? Look at this. We went sideways at the 127 quite a while here before breaking out. Why? It's the 127 extension. Then when we break out, where do we go? 161. Guys, this is magic. You'll do this on every chart. And then when you start doing it, you're like, holy crap, I can't believe this. Right? So now let's go ahead and take another extension. Right? We come in here and we say from this impulse high to this impulse low. Look at this, guys. I mean, it's insane. Here's the 127. Here's your 1618. Oh, right tool for the right job. Here, I'm just going to draw some more impulses in here. See? All right. So now from this high to this low, we can take it from this high to this low. And look at this, 1618. And this is where you start getting multiple clusters. I understand this is getting a little congested, but still driving the same point home. The 127 extension in coordination with the 1618. So we have a multiple cluster here, and we went sideways. These are months, guys. We went sideways 1, 2, 3, 4, 5, 6, 7, 8, 9 months at that 127. That was resistance. When we broke out, it's like, whoa, where are we going to go? Well, where do we go? Look at this. Cold in our tracks at the 1618 extension. This isn't news, guys. This is algorithms. This is symmetry. These are professionals that are looking at this every single day, and they know where to start taking profits. So if this thing just pushed up and it goes to the 1618, it's also the top you can see with the naked eye. But here, even before I do that, let's back these up, and you're going to see all these extensions. Look at this. This isn't rhyme or reason this happens, guys. This is science. Leonardo Fibonacci. Read up on that stuff. It'll blow your mind the way our bodies, our bones, plants, everything in life, the way symmetry and balance is required in order for things to operate normally. Look at this right here. There's, no rhyme or reason we don't stop. Or, it's a mystery. You're like, man, why do we stop at these areas? And look at where we. Okay, now this is getting way convoluted. So let's do one good on you now, right? So today, looking at Mo. First off, trend lines, right? So trend line support. So we know that this one is here. All right. There's a high there. There's a high as well. There. There's one right there. There's a high right here. And also the pullbacks, right? So when it pulls back, here's a low. When it pulls back, here's a low. When it pulls back, here's a high. Before it pulled, right? It went up and then it got tired. That wasn't a perfect one, but good enough for example's sake. All right, on a pullback, there it is. And resistance hit its head. On a pullback, here's the stop. Resistance hit its head. All right, on a pullback, resistance hit its head. So now we have all these lines in it. Back in 2004, 2007, was really not relevant, right? So, but let's do a Fibonacci. Right? Let's take one from this big old move. Oh, again, right tool for the right job, right? All right, from this high to that low. We hit our head right here. It failed. You say, hey, you know what? Let's take it from this high to that low. Look where we went, guys. Almost perfectly up to the 127. All right. Take it from here to there. Take it from this high. Well, actually, no, that's going to pull back because that was the high. There's another one from this high to that low at the 127, 161. So these are the areas that you are looking for on a monthly, and this is going back to 2017. Right? So we have all these lines drawn in here. And just I could say, hey, just get rid of the fibs. All right, remove. All right, so we have these fib lines in here. Now, what do we want to find out? We want to find out if this thing pulls back. Well, where's there a good area to buy? Well, we see right here. This is very relevant with support and resistance, right? So one, we can say, all right, it's been in a downward channel. So the top is resistance, right? There. Okay. So it's been in this channel on a monthly. You can say, all right, looking in here, this low right there, and this high to this low. That's where we kind of pulled back to the bottom of that chart. And this was similar to the ExxonMobil trade, you guys saw me get into a couple of weeks ago. All right, so, or last week or whatever, I don't even remember. Excuse me. So you can see at the bottom of the channel, well, there's a high probability that we push up. This blue cyan line is the 8 period. The magenta line is the 21 period. And this yellow line is the 34 period. And then you've got the 55 period. And if you guys look, the 8, 21, 34, 55, they're all Fibonacci ratios. Okay? They're all numbers on the Fibonacci scale. So that's another reason that these things become self-fulfilling prophecies. So we understand that in the longer term view, we broke down this support, right? This was huge support. We pierced through and got right back above. We weren't even strong enough to get back to the top of this channel, right?
Hey,
We're
hey,
at the
Pete.
bottom of the channel. Yeah.
Pete, can you hear me?
Yes, sir.
Hey, Jenny B was asking, so how would you create the next up or fifth level on something in blue sky territory? So I just want to let you know,
Right.
Question coming in.
Okay, yeah, no, that's fine, awesome. So give me a blue sky territory. We have JP, right? They're at all-time highs. Where you at? JP Morgan. All right, so we'll clear all of these. All right, remove. She's like, just show me that. I want to get the hell out. All right, here you go. So again, most important, your support and resistance lines. Right here, we understand this was areas of resistance. So on the way back, should act as support. And we can see it's in a pretty decent range in here. All right, so now we're at a higher high. Well, what are we going to do? We're going to take an impulse. All right, so from high to low, because we're looking from higher. So you start at the high to your low on this last impulse, because remember, this was a push up, pulled back, push up, pulled back. So from this high, we're going to measure, you want some thickness in this thing. So we'll look at, we saw what the monthly looks at. Let's look at a weekly here. And you can say, okay, we have an inverted head and shoulders, left shoulder, head, right shoulders. We got a breakout. Okay. Well, the breakout, where's this thing going to come from? Where's it going to go? Blue sky territory, right? So we can say, hey, from previous high, and you can say here from this high to this low, the 127, your first profit zone would have been 128. The 3003 is a new high, your next level. So what happened here? We took, and now you can see on the daily, and you're like, well, the daily is not like the weekly, or excuse me, this is the weekly, this is the monthly, and you can see I did that measured move based off of the monthly impulse. All right, from that high to that low. Let me erase this and make it more relevant. But you guys want to have multiple fibs out there. You want multiple levels, give you the more clusters you have, the higher the probabilities. All right, so we're going to do it from a weekly. You can see left shoulder, head, right shoulder, a little sloppy here, but it's still there. So we'll say, hey, this was the high, come across. Once we take this high out, from that high to that low, there it is. That's why it's kind of putting in that doji there. From this impulse high, the move is extended. It's done. So would I get into JP Morgan long now? No, not for shorter term. if I'm looking at a longer term, and understand we're looking at a weekly chart, guys. So this has extended its move. So if I want to get in this, well, where am I going to look for support? Well, previous resistance, right? Right around this level. So a pullback to this level, and then you draw, that's those trend lines. And then you draw, another trend line. So it might take some time for this thing to work. This thing might do, something like this, like this, it might fake you out a little bit like this, and this would be the best, if it catches up with this line. But the best one would be this setup. Now, let me erase that. All right, so Fibonacci from this impulse high to the impulse low. We're at the 1618. All right. The best scenario for this thing, in my opinion, technically, would be structure. You need time, right? So the more structure you have, the better, the higher the likelihood is. There's support, there's spent there. There's more interest. Okay. So even if this thing pulls back to this is not a bad buying opportunity at all. And also the 50% pullback, but we'd have to look at a different time frame here. All right. So we're at the 1618 extension. Best thing we could look for is, this thing comes back to here, does this, and then comes back here. Why? Well, this was resistance, right? So previous resistance right here. You want to look for that to act as support. So now we have multiple probabilities. We have the previous resistance, came back, acted as support, and we have this trend line support. Okay, so there's a high probability that this previous resistance, which is also, resistance here, resistance here, resistance here, and these are weeklies, guys, right? Every candle is a week. So you're going back to 2018, middle 2018, even further back, that you can see this good area of support. So that will increase the probability of us being correct. All right, so this would be the best area to look for this thing to support. Why? Multiple probabilities. Now, when you're looking at, well, if this thing pulls back, where's this thing going to pull back to? Well, let's do high to low, right? So we get our Fibonacci, and we get the 100% from this impulse, right? We had impulse from low to high, pulled back. So from this impulse low to this impulse high, wouldn't you know the 50% retracement comes in right at that level? So what do we do here? We have multiple probabilities. We had support, or excuse me, resistance, which broke out. We had resistance. We had resistance, right? So on the pullback, the 50% retracement, shoot, that's the area we're going to look for support right here. Previous resistance acts as support, which also coincides with, wouldn't you know it, a little bit of a trend line there, right? Doesn't mean it's going to happen, but that is where your probabilities are the highest. So the likelihood of you being right are greater. And also, if you're wrong, it's a small loss. You put your stop right below there and you're right. So you have multiple probabilities in your favor. So the likelihood of you being right is significantly improved. All right. But if you're wrong, you manage this correctly and say, hey, if I'm getting in at 120.5, if I only want to lose 100 shares, excuse me, if I only want to lose 100 and I'm buying 100 shares, shit, if this thing goes, if I buy it at 120, if it goes to 119, I'm giving this $1 stop. That's proper money management. That's it, period. You can't buy 1,000 shares, you 10 cents and you're out and you're wrong. So that's poor money management. Proper money management would be, well, I'm risking $100. I get in at 120, 120 half. I'm giving it $1. I could only buy 100 shares. Now, if I buy 200 shares and I'm risking $100, well, shoot, I got to have my stop at 50 cents. Does that make sense, guys? And if you buy 400 shares, you're like, well, I got to have my stop at 25 cents because that's $100. I'm wrong. I'm out. I'm not overstaying my welcome. See you later. Does that make sense? Any other questions out there, guys? But going into, Jenny was in this one, and this was the Mo. So you can see this channel that we had drawn in here. There's the weekly. So this Mo bounced off of this support level, and we can see now we'll come into so we understand where this thing has been on a weekly, right? It's been making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. You can still make money in a bear market. I mean, bear markets have rip your face off rallies, right? So even if you're buying stocks that are trending down, you want to buy them at the right time. So if you buy them at support, you can get a move up. So you're looking at this area here was support on the way up becomes resistance. Wouldn't you know it, it failed. So this area here was support on the way up becomes resistance. Wouldn't you know it failed. This area here was support on the way up. That's why it's a very important area here. Now, when we get back up to this 47.30, 47.5, which you still got another dollar move, that's going to be probably could fail. But if it doesn't, well, where do we go next? Well, we go to the 51, 50 half, 51. Then the next level would be a line in here. Where is it? Right here. So that was support. That failed. So on the way up, it becomes resistant. Here's support. On the way up becomes resistant. Failed or resistance. Bounced, bounce support. On the way up becomes resistance. And also the middle, if you do a pitchfork, this is the middle reverting to the mean, which is still weak. So is it weak on valuation? Is it weak on vaping? What's it weak on? It doesn't matter. The fact of the matter is this continues to go down. All right. I don't care what the news is. If you're trading this, and I always tell people when you're starting out, do not leave the Dow 30, because for the most part, those stocks are fundamentally sound. And if you're driving down the road and you hear something on the radio about Coca-Cola, McDonald's, Target, Verizon, AT&T, ExxonMobil, Walmart, Target, these are all Apple, all Dow components. For the most part, they're fundamentally sound, and they are, technically they have great setups. So you guys can make great money in those names. You don't have to get all fancy, especially when you're starting out. It's like, hey, let's trade names that are a little more stable. All right. So we saw all of this stuff in Altria. And, she was talking about that today. And again, we can see the weekly. We can zoom in. We know it's in a downward channel. Let's zoom in on the daily now from that downward channel. And you can see, oh, crap, what do we have here? All right. Remember, starting as far as the eye can see, back here, support, resistance. All right. When it failed, support before it bounced. When it failed, support before it bounced. When it failed, support before it bounced. It failed over here again, support before it bounced. Wait, support. So here it becomes resistance. When it failed, support right here before it bounced. And then it failed again. So support. All right. So now we have our lines on the way up. Look, I didn't see the future. I mean, we can see that here when it failed, and we couldn't see the future. It just becomes, support on the way up. Once we break below, well, we pierced up above it, but that area there was resistance. It failed. Support here. Failed. Support here. Well, it held, but on the way up, a momentary resistance here. And then it got going. And where did it stop? Resistance right there. And then support here, support here. That failed. Next area support right here. When it goes up, this previous support here on the way up, resistance. Right? So now this support level fails. This is support. And it goes back up. This support, this floor becomes a ceiling. Now we can say, well, another trend line in here, we have low, or excuse me, a trend line. That's not. You need 3 points. There's 2. Still not a perfect trend line, but you can see that it is a trend. Now we do have a left shoulder, right? Ahead, right there. A right shoulder. So this would have been a not too bad opportunity. It came right to the 21 period. And now where's the likelihood that this is going to go? We're going to look at this 1, 2, 3 levels here of support and resistance. So there's a high probability that this thing will fail or pause momentarily. And that's why, I mean, shoot, you saw it pause right here. You saw it pull back there. You saw it pull back here. There's a high probability it's going to pause here. But if it breaks out, well, where's the next level? Well, the next level was this support, this resistance, right? So the next level would be this area, right? And if that gets taken out, well, this support back here, support, resistance, resistance, well, then there's a high probability that that becomes resistance. And if that's the case, and if you're trading this stock, again, not a buy or sell recommendation, but as long as this line stays intact and we keep making higher highs, you guys just saw that. I just my stops on XRT today. XRT, I moved the stops up. Why? Well, this isn't no rhyme or reason. This is no magic. I'm no magician, guys. I just study the crap out of this stuff. Every single day, I know where they're at all the time. I know my level, right? So you can see on a weekly, there's a longer term chart, but XRT, we're getting here that it's probably going to hit resistance. But ultimately, I'm looking for this thing to go up to the 46, which is the 1618, another impulse. The first stop would come in at the 147.53. But there's no reason for me to leave this, right? Look at this thing. We're in this channel. Why am I going to take myself out of a winner? This thing keeps going. But I did have my stops down here at 40 bucks, took them up to 41.5. Today I brought them up here. And as long as we stay in this channel, and yeah, this thing could bucks, well, it's okay because I made $2 and change. In my style of trading, this is what suits me. Right? So going back to that Mo, well, we know it's got an inverted head and shoulders. And now, well, shoot, let's go ahead and draw in a Fibonacci, right? From the impulse high to the impulse low. Thing to the 161. It overshot, but it pulled back. And we could do even a clearer one, say, hey, from here to this impulse. These are the next levels we would be looking for, which also makes sense with the support and resistance. Here, now let me just clean this because it becomes a little convoluted, but you guys can see, right? From this high to this low. Where did it go? To the 50% retracement. And that's why I was telling Jenny B today. I was like, that looks good. Even though we know on a monthly and a weekly, the chart is trending down. However, you can see that it pulled back. The best entry was Friday, right? A pullback to the 50%. If you're sitting there waiting for the 44.50, 45 bucks, it's starting its move. So we're looking 47.12, 47, quarter. And we can see again, left shoulder, head, right shoulder, right? So our first target, we pulled back 50%. Our first target is the 47.12, or this high here. What was that? 47.15. It didn't grab right. Or excuse me, this high right here. That was the impulse pulled back. So 47.16. Yeah. So that would be our first target where we say, hey, what's happening? If it pierces through here, well, the next level comes in at 48.5, which also coincides with this level back here. Look at this. Right, guys? Support. Failed a little bit. Support. On the way up, resistance. Poke through this volume. I don't know. This might have been vaping related or something. That was a news event right there. So on the way up, there's a high probability if we take out the 100%, the next area would be the 127, and then followed by the 1618, which also, when you look at the 1618, this is a magic, guys. This is image. Right? There it is. Does that make sense? And guys, give me some other names. I'll look at in the SMH. That was something that we were talking about earlier. Remember, guys, the semis are the leading indicator of the. So we'll go back to a monthly. And again, this isn't relevant down here. But when we think about Fibonacci's, it's like, well, where is this thing? Where has this thing been? It's at all-time highs. But before going there, it's like, well, here's from that high to that low. From this impulse, where is it? An impulse high to there. Yeah, this impulse high to there. And there's still a little bit of room up, probably to 138. But that's, we'll look at, I just convoluted the crap out of this chart. But we'll look at here from this high to that. We're at the 127. We could still go a little bit higher. You look at, from this high to this low. 127. So we have two areas here, 133. So that is known as a fib cluster. There's multiple levels. They're saying, hey, there's a high probability off. And now look at this, guys. This 50% retracement from this high to this low. This isn't magic. Right there. That was an area that we went sideways here. That was resistance, and on that could be. So it held again, and that was a 50% retracement. And then when we broke out the 100, we got the extension 127. And you want to draw multiple, hey, let's grab several ones, from high to low, different points on a monthly, weekly, daily. Here's this high on a weekly. Oop. Again, right tool for the right job. So you can see how they're starting to cluster. Doesn't mean it can't keep going, right? The market don't care what we think. We've got, and again, this chart we're looking at here, this is a week longer time frame here. You can say, hey, we're within this channel, but it's extended now. Would you go buying this thing now? I wouldn't. I mean, yeah, if you're scalping, day trading, short term, yeah, it can still push up to the 138, 140 level. It can even overshoot. Crap, it can go to 150. It doesn't care what I think. But if I'm trading and trying to put probabilities in my favor and proper risk management and money management, I don't know. I wouldn't do it. So again, now if this thing pulls back, the best pullback would be to the bottom here. So we could take time and we go and it's like, man, okay, well, crap, this is 2020, February 2020. Why is this the best? Well, in my opinion, it's the best because it's multiple areas, multiple probabilities, right? We have resistance. It cannot get above right there, right? So that area of resistance on the way back, that ceiling now becomes a floor. So we have this probability 1, 2, 3, 4 times. It finally broke through. So on the way back, we have multiple probabilities where we have previous resistance become support. And we also have this longer term trend line that becomes support. So in February, I will be looking for this thing to come down to 121, 120. Unless something else happens. I mean, this thing could keep going, but the structure is not going to be there, so then you want to find charts neater that give you the opportunity setups. Hey, Bender, go ahead and shoot me some more names. You guys have any questions? All right. Netflix. What do they want? Fibs? And guys, time in the seat eventually, and then just once you figure that out, what he wants, let me know. Time in the seat, guys. You can see there's a head and shoulders formation here. This doesn't have to be perfect. This is sideways. You're like head and shoulders. Well, how's that a head? Well, there's the head and shoulders, right? There's your left shoulder. Here's your head. Here's your right shoulder. Right? This is the neckline. Okay, so when we're looking at this and setting this up, it's like, well, crap, where has this thing been? Remember, the most important thing, guys, support and resistance lines. And again, I will reference Charlie on this because he keeps it nice and simple. That's all you need. You don't need to get all fancy, but it's good to know, well, depending on your time frame, you're day trading, you're like, well, this is the high, that's the low. As long as it's in that range, I'm good. But then where do you start taking profits? It's like, I don't know. So you want to know where you take stops on losses and where you take, profits on gains, because if you're staying there overstaying your welcome, eventually you're going to be like, oh, crap, I should have taken, and I did a little bit of that today on, I didn't get filled on Alcoa. It hit the first target, except, I just should have sold. I didn't. But it's still technically sound, and I've got them out to January. All right, so you can see some levels I just started drawing here, and again, these are based off of size. Like if you can't see the future, that was the high before it pulled back. This was the high before it pulled back, and eventually those highs, they become, those areas of resistance become levels of support. Right? It's a self-fulfilling prophecy because all the pros are watching the same stuff. Right? So then you can say, okay, yeah, here's the head and shoulders. If that breaks, okay, well, let's do a Fibonacci look at this. And remember, guys, we're looking at that weekly chart here. This is a long time, right? So if we're looking for a break to the downside, we can say, okay, this was the previous high. Here's the impulse pull back from this low. to that high. I'm looking for a pullback to the 50% retracement, and it failed. It came down, and it's like, oh crap. Okay, well, it extended to the 100, the next area, 7, and it bounced off the 127. But then there was still further weakness, and you can still see, this downtrend, which is the most important thing. This downtrend channel, when you think about, charting, it's support and resistance, right? So this downtrend channel was still intact. So the 127, yeah, it broke here, and whoa, break. Woo! So once that downtrend channel, it never broke up until this point here. Once it broke, you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 17, 18 weeks, right? 2.5, almost 3 months of downward trend. So when it broke out with a vengeance. Because this line, everybody's watching is, whoa, that downtrend broke. Here we go, reverse it. Now on the way up, you can say, well, there's still a lot of congestion here, and you can see the line speak for yeah, go ahead, Bender. Did you find out what he wanted? What, or is it just this, what I'm doing?
Yeah, just what you're doing. He just said he wanted to get your analysis and where you think they're headed.
Yeah. So right now, I like Reed Hastings. In respect, I don't know him. I like, what he's done with the company. Valuation wise, they're rich. People are always talking about they've got the premium built in for a possible buyout. Yeah, like, oh, who are the people that could buy? $100 billion. What are they going to pay up? Let's see what they're trading at right now. And guys, I always direct people to go into FinViz is an excellent. All right, so go into Netflix, right? Netflix. Valuation 126. I thought they were low. 126.5 billion. If somebody were to buy them out, what are they going to pay? A 50% premium on them? Another, $60 billion, $180 billion for them when they're all making content? Yeah, somebody could buy them out. I remember talking to Fitbit. I was like, hey, somebody, in my view, I was talking about this as far back as a couple of weeks ago. We spoke about it on here like a month ago, that Fitbit's technology is better than iPhone technology with the watches. All right. All the studies out there that Apple has done with the iWatch, their sleep monitoring system sucks in comparison to Fitbit. So I'm like, hey, I wouldn't be shocked if somebody buys their property, and sure enough, but it was worth it for them. So when you're looking at, if somebody buys them, they've got a massive, PE and forward PE, and their valuation is super, super rich. All right. So with that being said, they do have good leadership there. What he's done with, they are, a different beast in respect of they've got an advantage because they've been in it for so long. And there's got to be a ton of money that's been pumped into them in order to make something out of them. So this is a monthly, guys. And you look at their international exposure and things of that nature, but this back here, $10, $20, not relevant, other than we all wish we had bought it there. So we look at, this was resistance before we had that big push. Boom. On a pullback, this area right here held, supported. And we actually made a lower low right here. So these lows, these are the areas we want, first off and foremost, 250 to hold. Now it's gotten a bounce off of that. We still understand that, the chart looks like a lower high. Well, it doesn't look like it. It is. Right? You can see that this high was substantially higher than that high. So long term, the monthly, barring any, and again, we trade on reality. We don't trade on what ifs. Right? So barring anybody really coming in and taking them out, which it'd be, that company who would buy them would probably get spanked because of valuation paying up too much. Right? So, all right. Monthly. All right. So low to high. And you can see here, if we lose that level, right, 50% retracement, if this thing gets up to the 15, which was this support here, also goes back with this area. If it gets back to 315, 320, and it can't get higher than that, and it fails here, then there's a higher probability that we eventually come down to 270. which comes at 214 to 210. And then you got the 204 area over here. So that is on a failure of this recent low. Now, if you want to zoom in and say, well, I'm not swinging that route, give me a look at the daily. I want to focus more on what's happening now, here and now. And Bender and I were just talking about, yeah, we understand that, but you're going to get the most powerful moves when you have a longer term view of support and resistance. And you can see here the monthly. Why do we get such a big move? Because of this area, right? So I can draw in a shadow box in there, and you guys can see that big bounce came in because this area here was a big area of previous resistance, support. So you're going to get the biggest moves, the 20, 30, 40, $50 moves on these big names when they're at a support level. It would have been greater if it's down here. So in the future, if they eventually get to this 127, let's say in the future being, because time also has time and price. The only thing that pays is price. However, if this thing pulls back and it meets this level perfectly in time, which would come in February 2020, similar to Altria or JP Morgan, excuse me, right? So if it comes into this level, what do we have? We have probabilities. So this 205 to 215 level, this range is where you will see the most violent moves, barring any news, because it becomes a self-fulfilling prophecy. You've got multiple probabilities and multiple algorithms and pros shooting off at the same time. And that's where you're going to get the moves that you see. Look at this 1 month move, massive moves, right? So if we get here, there's a high probability that boom, at least to this level. So you're looking from 214 to 250. That's a $35 move. And why 250? Because that is support right now. So if we lose this area on the way up, you better believe it's going to act as resistance. So again, we understand that. Now let's look at the shorter term. Even knowing, this is not perfect right now to get in, unless, you're longer term and you're accumulating and you have a belief. Right now, their fundamentals, and not just right now, always, their fundamentals suck. I mean, it's not, you can't say that they're making money, paying dividends, they're printing money, but we can say, hey, it's got a trend line there. It does have, again, this is a daily we're looking at here now. So you can still trade multiple time frames, guys, but understand when the monthly, weekly, daily all come into effect at the same time, you will get the biggest moves. All right. So looking at the daily, where is this thing? Well, we can see it's in this range. Right now, it's above this range, right? So we'll come in on that. And if we get above this 198.72, this 298.72, call it 300, there's a high probability. Then you draw in your lines. There's that level there. And then eventually, we could get up into the 332 level. And you better believe when it gets to 330, it's going to stop momentarily, other than it being some news or something else. But technically, algorithmically, professionally, what everybody's doing and everybody's watching is all these bag holders who bought at 385, the thing went to 250. And even the guys who bought here and they got a good bounce and then, holy crap, earnings, right? And when it went back up, look at this, guys, self-fulfilling prophecy. This is evidence in itself. When it pushed back up, where did it stop? Well, it stopped at the bottom of this floor, right? This is the first floor, second floor, third floor. You guys have heard me say that multiple times. Think of this as building blocks. So this was a strong foundation and went sideways here for the better part of January, all the way through July. So we saw, hey, every time it comes here, it bounces. So what's going to take it to break that? Volume or news? And we got both here. We had earnings and volume, and right below there, right? Sorry for that. That's disgusting. All right, so there's the failure. And on earnings, what did it do? This is one that probably, directional options made money because they didn't think it was going to fall that much. Right? And it went right through this level of support. It went right down here. And then it stopped right in this area. Bounced back up and we lost more. And then we came down and tested this area. So now it's trying to find a little reprieve. It's trying to, forgive me, I won't do it again. So if you're day trading this, understand right now that we are in a range. Okay. What's that range? Well, we see here support failed on the way up right here, became resistance, right? You can see this range there, right there, right? That range, we broke below that, but now we're back in that range. Right. So there is a high probability that we chop around. And this range offers you great range, right? From 282 up to 298. So call it, 285 or 280 up to 300. There's a $15 point move right there. That's 3% of the stock. And if you're waiting, well, what I do personally, I would wait for this thing to touch and increase the probabilities and also the value. When you get this thing moving, when multiple probabilities fire off, so here's 2, you need 3 points, right? Here's 3. So if this thing comes to this level right there, that's where I would be looking. And what's that? Well, that's at the end of November, going into maybe the Santa Claus rally. Who knows? Right. But what that's telling me is right now, I understand I'm in this range. So as a day trader, what do I want to do? I know from 280 to 298 or 300, 280 to 300. All right. So what am I going to do? Well, let's break it down to the 4-hour. I see if we identify anything within the 4-hour that the other chart did not show us. And I could this big shaded area up here. All right. So, oh, no, that remove drawing. All right. So I know in this area, minus this little hiccup right here, whoop, came right back. All right. So I know here go my lines on a 4-hour. Now I could even zoom in a little bit tighter. Right? Because that trend line was at the daily. Now, depending on my time frame as a trader, I'm not a swing trader, Pete. I don't care about none of the crap you're talking about. You're talking about when I get old, right? So break it down to a 4-hour. So we've identified, hey, there's a channel. As long as this channel holds, it's not bad for that time frame, right? The better entry would be down here because we have more points. And arguably, you'll say, well, yeah, there's proven points right there. We have the trend line. We have 3 points. There's 1 point. There's 2 points and 3 points, right? So that's in there. All right, well, let's break this down. Let's look at the hourly. The hourly show us anything. Well, yeah, we could start drawing some more lines. Clearer now that the sun is out, right? So what do we have? We have resistance here. Boom. Resistance. Went sideways again here. Boom, 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 like pinball machine. Whoop, breakout on earnings. Bam. Where'd it come? Right down here to pause, and it went right below that. And then it got back above. So this channel here, we got right back above into this channel, right? After earnings swing up, and they were exaggerated much in the move, but in my opinion, their earnings were really nothing good to say. But and again, that's just my opinion. So this area congestion, once it got back up, what happened here? We failed. We hit our head. Oh, we got back above. So now this top area, well, you look for that to act as support. We broke down. But all in all, this channel is still intact. So going forward, again, guys, not a buy or sell recommendation. We looked at the 4-hour and the 1-hour. Well, here's 30 minutes. Does this tell us anything? Yeah, we could draw some more lines in it. The closer you look, you can see, oh, shoot, there's a line right in here. And I can capitalize on these moves throughout the day because I'm a scalper, Pete. All right? So you can see, okay, and on support, it came down here. This. All right, well, there's the 30-minute. Well, let's look at the 15-minute. Well, this the last 5 days, 15 minutes. Well, shoot, we've got some more lines in here. This was that high there, which you guys can see. We broke out, right? And I just want to highlight this. So the opening here, so you're looking back last week here on, what was it? October 30th. That was the high. We took that high out and we went up. We hit our head. That was, throughout that day, we're like, okay, well, that was the higher high. When we on our lines, this thing breaks down. It's like, oh, we're wrong, and there's a likelihood it's going to come down here. So when it did, well, it broke, and where did it go? It went right down here. This high right here. Does it let me draw inside the box? All right, that high here. Wouldn't you know it? That was resistance, acted as support right there, and we got a bounce. All right, so when you're looking back and you're sitting on hands and you're like, okay, man, this thing is selling off, and you're short in puts. You're like, whoa, okay, hold on a second. Maybe my puts, I need to be careful here, right? Because this is previous resistance, probably a good area that this thing might bounce. And sure enough, it did. And it came down, well, not a little bit. When you look at the realm of Netflix, it went from 285 up to, 288, a $3 move in a couple of, 20 minutes. That's great. When you're doing weeklies, that can be huge, huge money, both against you and for you. All right. So again, support, we broke down, but came to the bottom of that channel. Then we pushed up. This is resistance. All right. So, and here again, after hours, whatnot. Hey, if we take that area out, well, where are we going to look? Right? This was resistance for that day. So on the way up, this does not stop here magically, guys. If you can see a couple days back, and you're like, well, shoot, I can't see the future. However, I do know that on October 30th, this thing did make a high and then it hit its head. Most of the day, it could not get above that 292.35, 292.35, 292.35. So sure enough here, we went sideways here for a little bit. We didn't quite get to 292.35. So you're watching throughout the day and you're like, man, if this thing breaks above this level, this 292, 292 half, all right, well, I'm going to look for this thing to come up here to 293 half. You could catch $1, but these are for sharpshooter scalpers. And sure enough, boom. And then the momentum even took, you could see an increase in volume here. And this came in around the lunch hour. All right. So pushed up. We got 295 for a high right now. All right. Now we can see that within this 5-minute time frame, we have a downtrend. Right? Every time it hits this line, it fails, 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 fails. So tomorrow, we'll see what happens in the shaded area here, guys. So tomorrow, and you can eliminate that. We'll see what happens. Obviously, this thing is going to go over time. So this downtrend line might be taken out. It's not going to exist anymore because just by virtue of time. So when it comes down to the bottom of this channel here, you can say, hey, you know what? There might be an opportunity if this thing kisses this channel tomorrow at 287 that I could look for this thing to go to 288, 290, 291, and slowly, just follow your moves, right? Here's your 5-minute. And you can see again, drawing your lines in there. This was after hours, but you can say, well, shoot, last night after hours, it went down to as low as that. And then you can see today, it hit our support right here, became resistance right there. All right, so now tomorrow, does this line get taken out? And if it does, break it down to the 1-minute chart and trade your 1-minute chart. So now I'm going to come in here. You guys already saw the macro view on this going back months, right? Clear drawing set. Now we're focusing on the 1-minute. And Maria's done a phenomenal job multiple times with this chart. Okay, so what are we looking at? We're looking at the first print on the open. I prefer to give this thing 15 minutes, 5 minutes at a minimum. All right, so that was the low, that was the high. If we take out the low, we're likely, right? There it is. If we take out that low, we're likely going low. Where is it? Right there. So if you decided to get long right here because you went back in time and said, hey, 286 is not a bad area, right? Let's go back and look at the 5-day, 5-minute. Look at this, 286. That's not a bad area, right? Because look at this thing right there. I'm not making these up, guys. That was resistance that day. Support this. They failed. Resistance, broke out. So on the way back, even though we pierced below, and you're like, whoa, hold on a second. You might have gotten short here, and then you're like, whoop, you might have gotten whipped out. But you're like, okay, this was the low of the day, was 286.31. This other level held, right? This 287 quarter. All right, you can say, yeah, you know what? This is a good area. You might have gone long, top, below this line or below the low of the day. But you can see as the day was progressing that the highs were lower. Right? We had a little bit of a pennant actually right here, and eventually that pennant broke, which if you're in this looking for, a trade for this pennant, it broke here, you can say, and then we're kind of looking for forgiveness. Look at that one. Let me go this one. Well, that one didn't work. And you just keep, let me look at this one where it's like, hey guys, depending on your time frame, understand what's going on. So now if you didn't do this trade here, or maybe you did, and you're like, man, I'm still in the basket. The markets are going up and this thing is pulling back. Tech today was up. Technology was slowly throughout the day, but we pretty much did what we did yesterday. We opened up, yesterday's caveat, we opened up higher and then we just kind of chopped around all. There was really no buy or sell programs throughout the day. It was just, there's opportunity out there, but for the most part, the markets in general just went sideways. It's like we're in a holding pattern. We're waiting for something, right? So this broke. If you were trading this, you're wrong. You're right. If you're looking, but you would have never been in because you're looking for the pennant to break to the upside, right? Here's our pennant. This is our first pennant here. We're looking, and the best entry would be if this pennant breaks to the upside, comes down, and then the resistance on the pennant becomes support, and we get going back to the upside. That never happened. All right. So now you guys know where this thing has been. Cancel that. Where is it? You know where this thing has been, where the likelihood it is that it might go. So for did today, we already know the long term. We have the macro view of this. So, hold today's low as support if you're scalping this thing and see where it opens up tomorrow. And again, I prefer to give it a 5 minute, which is this. And me personally, I want to see what the first 15 minutes. All right. So the first 15-minute bar is right here, right? That's your first 15-minute bar. We're in a 15-minute. So I draw my high and low. High of the first 15-minute bar and the low. So today would have been a frustrating day because I would have gone long on the break. And, if I'm a scalper and quick shooter in and out, I'm taking profit somewhere in here. I'm never, you're never perfect. You're never going to get the exact top. You maybe get that once every 1,000 trades or the exact bottom, right? So it's like, crap, you got long, and then all of a sudden, if it takes out the low of the day, you're wrong. Get the hell out. But you want to see your second, if your second candle makes a lower low, that's where you would get short. If your second candle makes a higher high, as it did right here, that's where we would look to possibly, hey, this thing is showing strength. But understand the previous days. Where has this thing been? Because if it goes up, where the hell is it going to go? Well, shoot, it's where it went. It stopped. And if it did break, it's where it went. Good use of words there, right? If it did break, then this is the next level because that was resistance there. And then this resistance became support on the way down. And then, right there, support. And then we had some major time spent in this area. And then ultimately here. So if I'm day trading these things, scalping, first 15-minute, if it breaks, I'm looking, I understand where this thing has been. Where's the likelihood that it's going to? All right. So we didn't quite get to yesterday's area on the push up. So there was further weakness. And this could have told me, crap, I got stopped out. I probably got long here on the high minute bar, and then this thing just started jostling around and it stopped me out because it made a lower low on the day. I'm wrong for a, momentum or day trading, short term, not necessarily scalper. You'd be using a 15-minute as guidance, but you're not going to be scalping 15 minutes. Unless you're doing a $10 stock that moves, 10 cents a day or something.
All right, Pete. So we got a question. Okay, so if I'm holding something for a month, do I use a monthly group of fib lines or weekly?
You could use multiples. So look at this, guys. I'm looking at the 15-minute, right? All right, from high to low. Fibonacci's, guys, understand they work on every time frame. Work on 2-minute, 3-minute, 5-minute. Now, if you're looking longer term, you're macro view. But I would draw multiple, right? So again, understand the impulse. And you can use, you'll see the tools down here. They've got this too much work for me. High to low, bring it back here, or low to high. That's going to give me my extension to the upside up there. There's my 127, 1618. And then also from high to low and bring it back. There's my 127 down here, 285. All right, so that was the range. Now, you're looking at this right there, low to high. You see, guys, it's the same thing. It's just the preferences right there. All right, so, and then high to low, we're looking for extension, right, on that impulse. Same thing, right on top of it, right? But it's just the way you use it. What are you looking? So what I would say is look at multiple timeframes and see the ones that are more powerful, the ones that are most pertinent. But again, the importance is using them properly. That impulse, right? And say, okay, well, here's an impulse right here, 1, 2, and it pulled back. So we can look at this day right here. So from low to high. All right. if this thing would fall apart, we'd like, okay, if it, then we will look for the 127, which it actually didn't. It almost did in the morning today, but it didn't go quite to the 127. So when we're looking at this, focusing on a 15-minute, remove drawing, you can look at from this impulse high to this impulse low. All right, when we broke out, it went to the 127. Went around, went back. Previous resistance sector that support yesterday, back to the 127. Boom, right through the 160 up to 180. Not quite enough, but you know, those would have been areas I would have been looking for. If it's like, man, if it's at the 180, well, see how much further. And then again, the most important thing, support and resistance back here, right? So when you look at support and resistance, and that's one thing, like when you guys hear the momentum names throughout the day and you see a big pop, it's like, whoa, guys, don't go chase, let it settle. All right. And normally when it settles, so was there any news on anything today that you could think of, Bender? Buyouts or anything? Hey, I don't remember. There was one, what was it, FIT the other day. So we'll zoom in on FIT. FIT actually a couple times. That was the buyout there. Let's go back and look at the 20-day. Yeah, so this move here, right? There's that big impulse when, it started moving and you can say, oh, crap, okay. And this is an hour. So let's go in here and say, instead of doing an hour, let's look at like a 15-minute. Okay. So zoom out, zoom out. When you saw this big pop, you're like, wow, holy crap, what's going on? FIT? Don't chase it. Right? And we have these lines in there from previous resistance series. So let's zoom in on this day when that stuff happened, when all that action happened. You're like, okay, well, let's look at a fib on this. Right? Let's put a fib right in here from this impulse high to this impulse low. I mean, we went right through the 127, 161, 261, up to the 423. Okay. All right. Was that one relevant? Not really. But there's the move. So from this high to the low of the day, where would we buy this thing? I'm not going to go buy this thing at $6 and, 609, $6. I'm going to look for this thing to pull back 50%. The 50%, you buy it at $5. This would be your buy, which also coincides with a period moving average. So 8 is a number of fib ratios. 21, 34, 55. And you guys ask me why I use them. They probably work because they're fib ratio, right? So this 8 period, that would be where I would entertain if I'm going to buy this thing. Wait, guys, if this thing pulls back 50% to 61.8% and golden ratio, that's where you would look to, hey, let me see if this thing gets a bounce. So in here, we have multiple probabilities. What do we have? We have the 8 period moving average, which is your momentum indicator, this IAM line. And then we have the 50% retracement, right? So after this massive move, it retraced 50%. And there's our bounce. And we could have gone in this and made a couple of bucks and say, hey, we're going to look at where this ended. I mean, the wick was up here, but a good area for profit taking would have been around the 550 to 560. From $5 and 15 cents on a $5 stock to cash 40, 50 cents. That's a massive move, guys.
And I've been asked about FIT a couple times, and I swear if anyone else, I'm just gonna say it here. Like the price was announced, the chances of, like once the price is announced, the chance of this thing moving, at all are pretty slim. So just keep that in mind if you're still staring at FIT. There's been a few requests.
Right?
What's that?
I said, yeah, we're not arbitrators, right?
Right.
That's it. It's in there. It's done. The price, leave it alone.
It's done. There's nothing left. The meat's off the bone.
But would you look at this? Look at that move that we did off of that initial stop. Look at that 1618. Isn't that crazy, guys? It just so happened to be, but it's just weird the way these things work.
Yep. So I want to be, respectful of your time, Pete. I don't know how much time you have. There's been.
Yeah, I'm pretty much done, man. I don't know.
Okay.
There's a couple questions, and other than that, I mean, we've been going for a good hour.
Yeah, we're about an hour and 48 minutes in, so totally understand. There's been a bunch of different chart requests, and I can, but at some point, I know you
I'll go
have
for
things to
another
do,
10,
and we
15
got.
minutes and we'll call it a day. If that's good with you as well.
Yeah, I'm good with whatever.
10, 15 minutes and we'll call it.
All right, so um, I think the the last two that I got, and I'm trying to go in order here. You could take your pick. We got Facebook and Costco.
All right. Well, I'm in Costco, and I've said this so many times, guys. Oh, cancel this. Think of this like real estate, right? Before, and people sometimes it's hard. They're like, "What do you mean? What do you mean by? What do you mean long? Short? How do you short something you don't? Right? How do you buy something? I mean, I don't have anything. I don't have. People can't understand if it's not tangible. You know, if they can't see it, can't hold it, they don't understand. Back in the day, they used to give you a piece of paper and send you one. There you go. Wipe your butt with that paper now because it's worthless if you held it to zero. Okay, so there's always some use for that versus not having understandable conception of, or just anyway, as we were moving on. Think of it like buying real estate. Before you buy a house, what state do you want to live in? All right. The state, when I come in here, is I don't understand. I don't know what's happening here. I keep getting this crap bouncing up. I'm gonna have to call out. This seems in Amazon. I mean, Apple products do not give you. Look at this crap. They don't give you. Usually, don't get viruses with those bad boys. But I don't know what's going on. All right. So I've got screeners set up. I'll come in here and I'll say, hey, what are my presets? I'm gonna come in here and say, you know, I got all the top 10 holdings for every industry. All right, I've got canceling methods. I've got a bunch of these methods in here. I got the, you know, the day trader names, the big names, positions, which this is antique. It's ancient. I got the S&P 500, all the stocks, the Nasdaq 100, overvalue names, January effects. Create lists, guys. You know, valuation, EPS growth, insider buying, all this stuff. All right. So what am I going to do? I'm going to come in here, and first off, I want to understand what's the S&P doing, right? So I look at the SPY, and if you guys, this is just basic. This is all free. Okay, we broke out of highs. We're within this channel. All right, there's a high probability, you know, we're extended to the 127, multiple levels of extension here. So a pullback to 300 would be healthy, 3,000. And we all know those numbers, right? 2980, 5630. You need the 2880. You got to know those numbers. All right, so we look at the S&P first. Then we look at the Qs, see if we get any clues, right? Here's the Qs. Qs are hitting their head up here, man. This is 1, 2, 3 points resistance. And remember, 195 was a previous area of resistance. So we broke out, rechecked, right? You can see we broke above 195 and then we came back and rechecked it. And here we go again. But we're at resistance. There's 200. We need a little bit of a pullback for symmetry. And we could come all the way to 190 and line, depending on what time, how long that takes. And it'll still be intact. However, you might feel pain short term, depending on the area you're in. So we look at the S&P first, we look at the Q secondly, then we look at the Russell, right, the IWM, and we know that they're lagging. You know, you can look at the monthly and weekly; they're nowhere near all-time highs. Look at this, right? But they're hitting their head on resistance, right, guys? Previous resistance broke out, support momentarily, pierced through, failed, and then resistance on a shooting star on the weekly. All right, so we know the S&P's at resistance, the Qs are at resistance, the Russell's at resistance, and lastly, I look at the diamonds. Why? Because it's only 30 companies and they're not properly leveraged. What does that mean? That means that what happened? All right, that means that, you know, Boeing, for example, 9.5% of the diamonds. Boeing, Apple, Caterpillar, Home Depot, Lowe's. I mean, excuse me, Triple M. Those 5 stocks alone, huge amount. You know, you're looking at about 30% of the Dow. So I look at them lastly, but still, I want to see what they're doing. I know they're in the middle of the range. We remember the S&P and the Qs are up at the top of the range. And now understand that diamonds have leverage to industrials, which is a big thing with trade, right? So how do we perceive this? Well, we're in the middle of the range. So to go long term on this stuff, I personally wouldn't, right? Unless you're hedging or you're advanced and you know what you're doing. But I'd rather wait for this thing to come back to this trend line. Now, either this trend line keeps going. And for us, if you're long, you want this thing to go sideways versus pulling back. You'd rather it go sideways, touch that trend line, and then get going back. All right, so what are these? The S&P, the Nasdaq, the Russell, the diamonds. They're the largest major indexes that we look at. That is your state. Then we look at the sectors, right? So come back into my screener and say, hey, you know what? I've got all these sectors in there. I can look at all the sectors, from industrials, biotech, consumer staples, XLE, XLK, or energy, technology, financials, consumer discretionary, healthcare, industrials, basic materials, utilities, retail, telecom, and the semis and transports. Right. So once we have correlation and understand that you need certain things to happen for certain things to move, well, first off, Costco, well, we can say, well, let's set that up, right? So Costco, when we type it in here, what's Costco in? S&P 500. Well, we know where S&P 500 is a little bit lofty, right? But we see Costco's at the bottom of this channel, which is beautiful. And you say, well, Costco is kind of consumer staples and consumer discretionary. So XLP, again, we have this line. I like to draw my own, but it's getting a little flat here and it's getting close. I'm in XLP as well. And we look at the top 10. So that's real easy, right? Top XLP, top 10 holdings, right? So you can see that. Well, XLP top 10 holdings, here we go. Look at this. You got Coca-Cola, you've got Procter & Gamble, you got Pepsi right here. Procter & Gamble, 16.5%. Coca-Cola, 11%. Pepsi, 10%. And we saw some action going after December 5 calls today, which bodes well for the XLP, which is also at support. So we go look at those, and well, why is XLP pulling back so much? Well, XLP, you can see, well, they're top 10. Look at Procter & Gamble, right? Look at Procter & Gamble. But it's at a good area here, this 89, this blue line, 89 period. This is also a good area of support. So keep Procter & Gamble, which is also kind of a flight to. And the reality is people are not going to stop wiping their asses, right? So keep that in mind for whatever that's worth. You can see there's a little bit of a channel here as well. This is sloppy. It's getting late in the. All right, so bottom side of the channel, right? Support and resistance. You know right away if you're wrong. Previous resistance, so probabilities, right? Probabilities in our favor. We can see that was area support. Right in there. Pull back, hit its head. So right here, this is not a bad area. Why? But if they fail and they take out this 160 level, then you're wrong. You're out. It's a small loss. But if you're right, you're risking $1.50. And if you're right, from 118, 125 to possibly 130. So risking $1.50 to make 10, 12 bucks. And again, guys, this is not a buy or sell recommendation. This is just for educational purposes. And yes, educational purposes. As we were. Okay, so Procter & Gamble, then we look at, and today you can see, well, where did Coca-Cola go? It went from the low to high. It extended to 7 extension. Previous resistance came back, acted as support. And we could also draw another line in here, okay, for good measure. 3 points. These 3 points were broken. And I'm getting to my point, guys. We're going to look at Costco. But before doing that, the thing I want you to get out of this is find these, understand what the larger picture is, the bigger scheme of things, right? So it's not all about Costco. It's not all about Coca-Cola. It's not all about, Pepsi or Procter & Gamble or any of those. It's about the market as a whole. You guys ever hear the term throw the baby out with the bathwater? They don't care how great that company is, the leadership, the products. If things are bad and they're selling, they sell everything. And for me, what I see going forward, one of those things that they call black swan events, one of those exogenous events, is the use of ETFs. Everybody throws money into ETFs because it's a basket of things. So when something comes out one day, I think that might be the next bubble, the research I've been doing in ETFs, where they start dumping them. Everything's going to go. If they sell everything in their, XLP, what are they selling? They're selling all their, consumer staples. So all the names in that basket are going to hit the fan, right? So today, when we saw that alert coming in, those 55s, hey, we're at a good area of support. There's a good probability, we're on also the bottom side of this pennant. We do have a left shoulder ahead, a right shoulder. We're at the neckline. This neckline looks to be pretty good. So at a minimum, we should see at least a push back up to this 53 bucks. And if we keep going, then there's a high probability that we hit our head up in this area, which comes in around 53.5 to 50 bucks. buying the 50s or the 55s. I got into the 50s out to January today. The action that was happening was the December 55s, which they were going for like 25 cents or 27 cents or something. All right, out of the money. So if we do get a move, that's the thing with options, fast, especially when you're looking at the weeks and near term, because theta is going to work against you. So if we do get a move in this thing, which is also consumer staples, kind of a flight to, after healthcare, bonds, gold, things of that, utilities, then let's go into some consumer staples. So we know consumer staples were extended, they pulled back, and you can say, well, if this thing does continue to pull back, right, again, from high to low, I mean, this thing could come down here to the 50%, which 50 be an excellent buying opportunity again. Well, why? Because it's low risk. Again, not a buy or sell, but see this area of resistance right here, this area of resistance right here, this area of support right here, support right there. So sure enough, you better believe if this thing pulls back to this area, it's also going to act again as an area of previous resistance to be supported. All right, guys. So looking at Costco, we looked at the top 10 holdings of the XLP, and we looked at the S&P, and now Costco. Well, this is looking very similar to the XLP, right? The XLP. So looking at consumer staples and also consumer discretionary, they're in that as well. XLY. All right, XLY. Here's your XLY. I just deleted these all the other day. Let's bring this up on a weekly. And you can see this is a little bit of a wedge. And that's one thing I want you guys to learn. You guys do what you want. You might say, hey, this is crazy. But, do what you guys want. But you want to learn patterns, pattern recognition. Right? You got a little bit of a pennant there. And we do have, trend line. You can see, well, where has this thing been? All right. There's an impulse here from high to, that's not the high. There's the high before the pullback right there. Where did it go? Right to the 1618, guys. Look at that. Isn't that amazing the way that works? It went to the 127, then it went sideways, and it failed. And then went right to the 1618. So now, if this pulls back, remember, right? It didn't pull back here. If it did, we were looking for the 50. It didn't pull back. So recent impulse. High. If we want to see a higher high on a break of that pennant, high to low. To the 50%. It actually overshot, went to the 61 down here, 61% retracement. And then within this pennant still. So it's still coiled. This is a weekly, right? So we'll break this down to the daily and say, whoa, there's a bigger range there, right? And within the daily, you can see, well, here's a cup, here's a handle, here's another cup, there's another handle, but it's actually hanging out up here at the higher end instead of the lower end. So we'll take another fib and say from this high impulse to this low. Look where it stopped, right at the 50%, which is also the 89 line. So it stopped there. So now we're looking, if we did get long here at the 50 and say, hey, I'm getting a stop right slightly below there if I'm wrong, because then it's to this area, and I'll revisit it again at that trend line. But I got long here, hypothetically. I'm not long consumer discretionary, but hypothetically, if you were, then you could also say, well, let's put in a little more technical analysis, crap out of people some more. Here's A to B, right? That's 1 point, activate, trend line. So AB on a pullback, C, D. So if we do get going, these are some levels that we can look for taking profits. Well, the first area would be, well, right here is the downtrend line. So we're going to have to contend. All right, you guys see this right here, real close. First off, we're going to have to contend with this pennant that we're in, okay? So here's a pennant. We're going to say, man, is this pennant going to break to the upside? If it breaks to the upside, then this high, which is 123.28. If we take that out, then we're looking at 124.60 and then 125.28, which is the 127, and then the measured move from A to B, B to C. Your measured move is C to D, which takes you up to 126.5, 127, which also comes pretty close to the 1618 extension up at the 127.8. Then you have the longer term from this high to this low, which will give you up around the 128.73. So that's consumer discretionary. So that kind of both right? Before we bought our house, well, what's the state looking like? Do the tax benefits, help us, or are they against us? Then what does the city look like, which is the sector? The state is your index, your NASDAQ, your S&P, your Russell, your diamonds. And then the sector is your city. Well, does that city, hey, I have kids. How's their school? Hey, everything's looking good. Everything's looking great. So when we looked at the XLP, the XLY, the XLP looks a little bit better. The XLY is in that pennant. It needs to break out. We know that the S&P is extended. The NASDAQ is extended. The Russell still has some room to go. And the diamonds is breaking out in the middle of the range. So we know the macro view. Now we're looking in at separate sectors because of rotation and saying, hey, even if things sell off, they're going to be sending money into different areas. So if the S&P is extended and say, hey, consumer staples have pulled back, they're a flight to safety a little bit, right? So when we look at Costco, look at this thing, guys. For the better part of almost a year, since December, look at this channel. I mean, we can still be wrong, but the probabilities are in our favor. The risk is less, right? So if this line breaks and say, hey, you know what, we got to give this a little room. It's not perfect, right? But if it goes below this channel, say, hey, the channel's wrong. I broke. I'm out. See you later. I'm out of here. But if I'm right, the first point comes in at 304.88. Second point up here, the 1618, and then eventually up to the 127 extension off of this recent impulse. And that's my target up at 319 and eventually up to this level, 330. I'd love to see that by the end of the year. Likely not going to happen, but now let's zoom in for the day traders, right? The scalpers. There's your 4-hour. We've been in this block. Right? We understand, okay, well, shit, we're in the middle of this range. We can still come back to this channel down here. And as a day trader from 299 to 292, that's going to hurt. For me, longer term, that's not going to hurt. That might give me a little, punch in the head and whoa, what's going on? Wake up. And I'm going to straighten my act out and either, hey, get stopped out and not get crushed, or, hey, it's going to bounce. I might add a little bit more on my size. And then, look for it to get back up and understand the congestion it's been doing here. This is going back, guys, to the 9th of October. So you're looking at a month that this thing has been in this area, right? So even if we're scalping, day trading this, okay, well, we looked at the 4-hour. Let me get rid of this shadow box so you can see this a little clearer. Well, look at this 30-minute. You can see from 295 roughly up to the 298 to 300 level. All right, so we'll break this down to 15-minute. And say, how do we structure this? Would I get long this right now? Hell no. Not as a short-term intraday trader or scalper. Scalper, I'm going to have to see a little more information, right? But as an intraday trader, it's getting to the top of this range. Guys, from 299.50 up to 300, make 50 cents and possibly lose $5. That is a poor man's, so tomorrow, hey, if this goes back down to 295, if you're a scalper or not a scalper, if you're a very short trader, those options, if you're directional and calls, they will hurt. But if you have time and you're deeper in the money, you're not going to be affected by the Vega and the Theta as much as if you were completely out of the money and short term. All right, so we say, well, here's the line here. That was the, this was the high before we pulled back. And we can say, hey, this was support over here. And there's another level of support. And it comes out here. So this is the 15-minute, and we look at the 5-minute. All right, this is the high today. And now tomorrow, guys, if you're looking at this, you got to be properly equipped before you get in to anything, right? You go out in the rain. If you don't know if it's going to rain and you didn't take an umbrella versus, hey, you know what? I'm taking an umbrella. It's raining today. The forecast says it's going to rain. I can see my moving map. It's showing this stuff moving. I know there's a cloud overhead. So when I go out without an umbrella, right? There's a big old cloud sitting right up here. Why am I going to get long? Why am I going? There's a cloud right there, guys. Now, if we go beyond that cloud, whoa, wait a minute. Well, where's the next level? That's where we have to start looking. 305. There's some more room, but right now we need to understand our time frame, our levels. Right? And then we'll break this down to the 1 minute for the scalpers. And again, you can see the high. And you knew, hey, there's a cloud up above, but I get in a range for me to trade this thing because it's got an ATR of better than $3. I mean, this thing is fairly decent. I don't have to catch $3, but $1, and I'm a good trader and I'm confident because I've been doing this a long time. Time in the seat. That's what this is, guys. It's time in the seat. It's studying. All right, so here go our time, right? There's resistance becomes support. So when it pulls back, right here, this resistance broke out, came back, acted as support. Guys, this isn't a mystery. It is when you're new, but once you learn it and you're waiting for these setups. So see, a lot of people would be getting in long here. Oh crap, 298, that was resistance. And then it came back. And what did it do? It came back, a dollar pullback and it stopped you out. And you got out because of pain. If you were watching that 34 and also previous area resistance in coordination with the 34 period, and shit, we'll throw in a trend line in there for good measure. Even for the 1 minute guy, you can make money on this, but you have to get in at the proper time, guys. You could get in on the breakout here. So this high breakout, boom, this is the next level. We didn't get completely there, but hey, it pulled back, and you could have said, hey, you know what? This is previous resistance. Excuse me, shit. All right. Whoa, dope. All right, stand by. Technical difficulty. There we go. All right, guys, and this is it. After this, we'll call it a day because that 15 minutes is up. So even throughout the day, guys, for the 1 minute chart, you have that trend line in there. You let the day out, let this thing develop. You can see, hey, there's a channel in here. Draw these throughout the day so you're not, sideswiped. It's like, whoa, what the hell just happened? Well, what happened was you got in at the wrong time. You chased. Why would you get in here? It's the top of the channel, right? You should not get long as a scalper up here. Now, well, you're like, oh crap, all right, I missed. What am I? The bottom of this channel right here. This might be an opportunity. Breakout. Well, here's the top of the channel. We can't see the future, but understand, hey, this thing keeps going. So as the day progresses, if it gets up there, you need to take profit because this is the top side of the channel, right? And where did it come? Well, the bottom side. You could have tried to buy again at the 34, but whoa, you're wrong. You're right. Take a small loss. And then this support of this channel up here becomes resistance, right? Supports become resistance. Floors become ceilings. So you could have said, whoa, okay, well, this thing is now giving me something else. Now this thing is reverted to the downside. And we have a downward channel. But then, now you're getting into chop. It's like, oh, shoot. Now I'm getting all chopped up in this area. Is this worth trading this crap in? It's like, guys, take a walk, go work out, go beat a bag, go have lunch, go hang out with your loved ones. Once this trade is done, you're out, you're wrong, see you later. And again, you can implement a Fibonacci on this, a 1 minute time frame, right? You say, okay, well, shoot, we can't see the future. All right, let's wipe that thing out. You can't see the future. But we could say, all right, if this thing breaks out, puts in a higher high, here's the impulse high, the impulse low. Where's it going to go? Look at that 1618. That's, look at that thing right at the top. So that's telling you, hey, multiple probabilities for me to get out. It's the 1618. It's an area resistance. It's the upper side of that channel. Do not overstay your welcome. This is for a scalper. Again, this is understand the time frame of your personality. Shit, if you're long term and you got a couple months out, for me, I don't care about this. I'll look at it throughout the day. And, guys ask questions, I'll look at it. But for me, what's important is this. This has proven itself over and over again for a year worth of data versus 5 minutes worth of data. That to me are the strongest moves because there are all sorts of traders. You have the longer term, monthly, weekly, daily guys. You have, the hourly guys, the 4-hour guys, the 30-minute guys, the 5-minute guys, and the 1-minute guy, which girl hate you. But the time frames, when they all fire off at the same time, that is when you get the biggest pop. All right, guys. So anyway, thank you for joining us tonight. Sorry it took so long. Hope this was helpful. I cannot emphasize enough on, money management, your risk, educate yourself, spend time, read about this stuff, the charts, learn your patterns. And here I'll leave this. Sometimes people ask me, I'm like, guys, just Google this thing. Go in here and say, all right, the stock chart patterns. All right, well, see what that gives us. Look at this. Stock chart patterns. Here you go. I don't even know who. I'm not advertising for anybody, but listen, read these things. All right, what the hell happened? Join now. No. All right, so look at these. All right, you got a pennant. Learn what these things are, and they work on every time frame. the monthly, the weekly, the daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, all the way down to the 1 minute and tick. Learn these patterns. And then, the longer the time and space, right? The larger the move. So if you have probabilities in your monthly, in your weekly, in your daily, the likelihood of you being right is substantially increased. You could still be wrong, but right away when you're wrong. There's smaller losses, where if you're right, you are going to bank. Okay, so just go through these guys, learn these patterns. You hear people talk about them all the time. Understand what they are. Inverse head and shoulders, this is one of the strongest patterns. Why? Because it's got multiple probabilities in it. You have an inverted head and shoulders pattern. That's one probability. You have this head tip. You could draw a line in here, right? 1, 2, the breakout of the neckline, which was resistance, comes back, acts as support. Right? So here, we want to find charts that have inverted head and shoulders. So, oh shit, how do we do that? Well, let's go look for setups in FinViz. It's free. Head and shoulders formation, where are we at? All right, these are head and shoulders. You look for inverted head and shoulders, but you're getting, you can see here. Any names that we trade in here? Maxim, that's sloppy as hell. Karma, sloppy. Drip. Okay. All right, hold on a second. Let me see. I'll find something. Well, shit, we did Mo. Mo has an inverted head and shoulders, so look at Mo. There's a couple of them out there, but Altria, okay? This is the reason this becomes so powerful, guys, right? One, we have the pattern, okay? So we have inverted head and shoulders form. That's one probability. All right, so left shoulder, right? Head. And again, remember, this is in a long-term downtrend. This is for educational purposes only. And you can see, okay, well, left shoulder, head, right shoulder. Now we draw, a trend line from the bottom. So we have the inverse head and shoulders probability. All right. We have the neckline. All right. It's a little sloppy, but you get the gist. Once this breaks above that neckline, that previous resistance now becomes support. So we have an inverted head and shoulders, check. We have a trend line, 1, 2. If this thing pulls back here at 3 points, that's 2 probabilities, check. We have the resistance of the neckline that breaks out previous resistance, becomes support, check. We have a channel, right? And so on and so forth, and you guys get the gist. Check. So the more probabilities we have in favor, the higher the likelihood we will be right. All right, guys? All right, guys. Listen, have a great night. Again, thank you so much, you guys. And remember to learn your patterns. Learn these things. Learn what they mean. It doesn't mean they're going to happen, but the probability is increased because everybody's watching the same thing. And they program the algorithms around these things. So that's it, guys. Again, thanks for joining us. Bender, thank you so much for your time. Really appreciate it, and I hope this was helpful.
Dude, Pete, that was awesome. I got a lot of thank yous in chat that I was asked to relay to you. Everybody just very appreciative and thankful for the time that you spent here. The time that you donate to help people learn this stuff and help people understand this stuff. And I'm glad we were able to get the screen share working, which is, I feel like we covered a lot more content than when you've got to, take a screenshot with your phone and post it, and take a screenshot with your phone and post it. That was
most of the time, and it's harder for them to understand. And we're all different, guys. Remember that. Some people just learn by hearing. Some people, hey, they need to use multiple senses. I need to see it. I need to smell it. I need to feel it, to learn. That people learn differently. So being able to see it and hear it at the same time versus just hearing. And then if you don't know, it's like, well, how do I go? I don't understand it. So being able to see it and hear it at the same time significantly improves the learning. So yeah, my pleasure. And thank you too.
Yeah, thanks, man. Hey, you have a good night, and I hope you guys, enjoyed it. I know you did. I know I did. This is being recorded. That's been asked a few times. So it will be on my channel here on Twitch. Everything gets recorded. So you can go back and look at it. I tried to put in stream markers to kind of give you a sense when if you are watching it, to try to give you a sense of where certain topics were covered. And I'll probably take this video and slice it up into some smaller sections, covering each topic, and then put it in as a playlist. Um, but yeah, Pete, that was awesome, man. Thanks for doing it.
Yeah, my pleasure, man. Have a great night.
You too. All right, we'll talk soon. Bye.
See you tomorrow.
All right, that was the fabulous Pistol Pete, giving us his time. For those of you that don't know, Pete is one of the legends around here. He spent a lot of time and money to learn this stuff. So when he shares it with us, we definitely, appreciate it. We take it in. It was long, as it usually is, but it's worth it. Full of information. I try not to interrupt him. Try not to cut him off because you can learn a lot from this guy. So that's it. You guys have a good night, and I will chat with you all tomorrow. I will likely be live. I'm sure I'll be live before the bell. So if you have other questions, we can try to answer them. And thanks for joining. Thanks to those of you, Mel. I saw a bunch of you, or at least a few of you that subscribed using that Twitch Prime, and I appreciate it. Definitely. So thanks all. Have a good night.